Welcome to part two. If you haven't watched part one, Doug Lawson from MarktoMarket sets the market backdrop there. We've got the link below. So, the SaaSpocalypse. It's a striking name for a live issue, what large language models are doing to the valuations of traditional software businesses. And we've got those examples like Claude and ChatGPT. The question isn't whether AI will affect these businesses. It's definitely already happening. The question is which categories are most at risk, which are more insulated, and what that means for valuations today. So here's Doug.
Now, the SaaSpocalypse was really, it was Anthropic, which we'll all be familiar of, the owner of the Claude large language model. It launched Claude Cowork in February of this year. The demo of Claude Cowork showed AI agents handling these really sophisticated tasks like financial analysis, project management, and so on. And it really spooked the markets because how the markets responded to this was that this was going to make lots and lots of software companies obsolete. There was 285 billion wiped off the SaaS market value wiped off in 48 hours. And the big fear, if you really distill this down, one of the huge fears here was the death of per seat pricing. So we're all familiar with paying. If we're an enterprise, we have 100 people. They all want access to the software. You pay for 100 licenses. If you've got AI agents doing a lot of this work, you no longer have 100 people. Maybe you have 10, maybe you have 20, maybe you have 50. We don't know yet. But you have less than 100, and therefore the per seat pricing falls. And at worst, whatever you're doing in your business becomes, as I said, completely obsolete. This is a really interesting post. I thought this is a well-known VC. This VC kind of says, look, there are four potential outcomes here in terms of how companies buy software in the future. You just buy everything from the large language models, which is number one, companies build it for themselves on top of the foundational models. Under one and two, kind of all other software products kind of cease to exist. Number three is that AI native software companies, so companies built on AI, will prosper. And number four is existing software vendors will integrate AI into the application there, which I think is what most software companies are hoping for. And we certainly think that's what's going to happen. Deals have still been happening. This is Q1 2026 annualized numbers. So software deals are still happening. They're still looking okay. But what kind of software deals are happening? If you look at this, a lot is not traditional SaaS. So we've got quantum computing, we've got crypto, we've got infrastructure software. We've got platforms, AI drug discovery. It's maybe not classic SaaS companies, because I think the reality is this is not a great market to sell your traditional per seat SaaS business at. The ones that have sold, here are some examples. The multiples don't look great at all. And I think maybe that speaks to the fact that I'm not sure you'd be a seller in this market if there wasn't a very, very good reason to do that. So you can see here the kind of multiples we're looking at: 1.6 times revenue, 2.3 times, 4 times upfront, 1.5 times. That's considered pretty cheap for a software business. These are revenue multiples, of course. And then if we look at really small stuff, so we've got a few deals. There was an 11 million deal, 1.2 million deal, $12 million deal, 2.3 million deal. Again, very low multiples, although some of these companies were heavily loss-making. Some of them were in decline in terms of their revenue, so maybe not the highest quality businesses. In terms of fundraising, I think this is what's really dominating the market at the moment. So we can see here that in Q1 2026, global equity funds raised 330 billion. 81% went to AI model infrastructure and related companies. OpenAI, of that 330, OpenAI, owner of ChatGPT, was 122 billion. So it's just, they're really dominating the markets. Anthropic, owner of Claude, is about to do a raise as well. That's mooted to be 50 billion at 900 billion valuation. And then this is one that's happening in the UK at the moment. So the large language models really dominating. We sometimes think, when you get older, you take a step back. The Economist newspaper was sold for 300, or a 27% stake was sold at a valuation of 300, Telegraph 575. Why am I telling you this? Well, I just think these are businesses that everybody expected to be made obsolete by the internet, and they're still going, they're still prospering. And that's me. Hopefully that was useful.
Okay, so that framework, thinking about software exposure to AI substitution, is one of the more practical tools I've seen applied to the problem. In part 3, we've got Richard Angus, who'll sit down with Doug to get into what this is doing to M&A markets right now. So why strategic buyers and PE are behaving differently, why processes are taking longer, and what buyers actually do when they can't model the AI impact on a target's revenue.